Welcome to Earnings Central. In this video, we'll break down Lovesac Company's third quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q3 was $154.2 million. The company actually reported revenue of $149.9 million, missing expectations by 2.8%. This quarterly revenue also marked a 2.7% decrease compared to the $154 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q3 was a loss of 35 cents. The company actually reported a loss of 32 cents per share, exceeding expectations by 3 cents. However, this result reflects a 113% greater loss compared to the loss of 15 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First up, gross margin. Lovesac saw a solid increase of 110 basis points, reaching 58.5% for the quarter. This improvement came primarily from reduced transportation costs, both inbound and outbound. It's a testament to the company's operational efficiency and strategic cost management. Next, let's talk about SG&A expenses. These rose to 47.9% of net sales, up from 43.9% in the previous year. The increase was mainly due to investments in payroll, equity-based compensation, and rent. While this might sound concerning, it's important to understand that these are strategic investments in the company's future growth. Adjusted EBITDA showed a slight uptick, moving from $2.5 million to $2.7 million. This might seem modest, but in a challenging retail environment, maintaining profitability is no small feat. The company has been carefully managing its expenses while continuing to invest in innovation. Inventory management is another bright spot. Lovesac reduced its total inventory by 3% at the end of the quarter. This was achieved through recent investments, including a new order management system. Efficient inventory management is crucial in the furniture retail space, and Lovesac seems to be handling this well. The company's cash position remains strong, with $61.7 million in cash and cash equivalents, plus $36 million in committed availability, and no borrowings on their credit facility. This financial flexibility gives Lovesac room to maneuver and invest in growth opportunities. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The standout story is the recliner launch, which has been nothing short of remarkable. In just 3 weeks, Lovesac has sold over 4,000 units. What's impressive is the balanced mix, about 50-50 between existing customers adding to their Sactionals and new customers entering the brand. One of the most interesting dynamics is the company's quote and conversion landscape. Lovesac is seeing double-digit quote growth year over year, but facing challenges in converting those quotes to sales. The management attributes this to cautious consumer spending, especially in the pre-holiday period. However, they remain optimistic about converting these potential sales. Product innovation is accelerating at Lovesac. They've moved from 2 to 3 new product introductions per year to more than half a dozen this year. The recliner is just one example of their commitment to expanding their Design for Life platform. The company is focused on creating products that not only attract new customers, but also provide existing customers with opportunities to expand their initial purchases. The omni-channel strategy continues to strengthen. With the rollout of MyHub Phase 2, customers can now start their journey in a showroom and complete their purchase online seamlessly. This approach has been driving internet sales growth and creating a more integrated customer experience. Lastly, marketing optimization remains a key focus. The company has transitioned to a new media buying agency, which has already shown improvements in pricing, media placement, and targeted tactics. They're exploring areas like influencer marketing and localized digital marketing to drive customers to their showrooms and boost quote generation. Looking ahead, Lovesac is preparing for their Investor Day on December 17th, where they'll likely share more details about their strategic framework, new products, and growth initiatives. Despite the current challenging retail environment, the company appears confident in its ability to navigate these headwinds. That wraps up our recap of Lovesac Company's third quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.